Hello everyone, I'm more than happy that you're with us. Good morning America, hello, and a nice lunchtime in Europe or Africa, wherever you're listening us or following us, and of course good evening in Asia. So wherever you are, all of us are combined with one common interest, which is the market, the stock market, for example, but also FX, of course, or commodities, whatever you're interested in. We are together here to kick off the new investment week, your new trading week, with some trading ideas, with some ideas how to look at the markets. And I'm more than happy because this might be a very exciting week. Today, for example, with Tesla and earning data. We have the earnings season, so many things can happen, and we should be prepared for that. We are here on board with 4 persons today. It's Gilbert Kreuzthaler, who is joining us from Vienna. He's trader. You know maybe his very famous trading style, and he's also the inventor of Traders Yard and the xTasyTraders. And I'm really curious what he is delivering for us today. And of course, we have Martin Gersch with us. He's a portfolio manager currently in Düsseldorf. I'm not sure where you're located today because you're very often on a trip. I know you're also in Zurich and in Frankfurt sometimes. So yeah, today from Düsseldorf in Germany. And we have Mike Seidel from Frankfurt. He's also a portfolio manager, also bringing us good ideas today. And myself, I'm from Frankfurt, currently normally located in Tokyo, but because of Corona, I'm bounded here and I cannot go back to Japan, unfortunately. But as an institutional trader, I can trade from everywhere in the world, so no problem at all. So I'm more than happy that we are here together, and to kick off what we want to talk to you, or what we want to talk about today, we should bring a slide, and I hope you can see the slide of this risk disclaimer. It's really important because we are giving you our trading ideas, and this is for educational purposes, of course. It is not a trading advice because trading is a very personal thing. Maybe you take more risk than we do or less risk than we do. You have more time or less time. It depends very much on your own personality, of your own emotions, whether you can follow some trading style or not. But we want to give you some impressions, some ideas how to approach the market, give you some trading ideas with some stocks, for example, some different markets. We will have gold on board as well. So I hope you can find the best out of it. And of course, you will find different trading styles so that you can find, I like this approach here. I like this part of trading style here. So you can combine it to your own needs and do whatever you prefer. Be advised that we may trade our trading ideas by ourselves. We normally do that. So be advised that it can be that we are influenced, that we are biased already because we love this stocks, these instruments currently, the situation there. So we want to do this by ourselves or for ourselves or our clients. So what do we have on board today? I have 2 titles. I will tell you later. You can have a sneak preview here what we will talk about today. So if you want to follow us, this is what you can expect for today. So I want to switch to my trading screen and introduce you some ideas. And to do so, I will turn off my cam. But before that, I have to switch to my trading screen. Give me 1 second. So hopefully you can see the charts now, and so that you have a better and a clear look, I will turn off my cam as well. So before I start with my 2 stocks that I have in focus for today, I want to give a sneak idea for the Dow Jones. In this case, it's YM. This is the future, the September contract for the Dow Jones mini future. So this is giving us an indication what the market is doing here, at least the standard, the blue chips, the standard stocks, for example. But this is roughly the same with the S&P 500. So if you prefer some other stocks or the broader stock market, you can apply the same thoughts with this market as well. What do we have today? The good news is that after the drop we've seen last week, it was a strong drop, and some people, some traders, and also the media was quite impressed and said, maybe we have to expect a big, strong move to the downside. We did not expect that. It came too fast. It was too far down. Of course, all the people writing negative things about the market have been disappointed a little bit because the market recovered in a V-shaped recovery in this case, and did not play the bearish card here in this case. Just to give you an idea how I look at the market just in the aftermath, you can see this is the first move to the downside. As long as the market is only pushing in a weak manner, for example, in a corrective pattern like we see here, or you can see something like an ABC pattern, this would indicate to me that when plunging through this level, the market would turn to the downside. But now we did not see this one. We did not see this ABC pattern or this corrective back and forth. We saw some really strong answer. We saw a really strong recovery from that level here, which is not giving us any idea for selling short the market. Vice versa, we had maybe some good opportunities here in the ABC pattern here. We had some corrective sideways pattern here to enter maybe long positions, but this is in the past. So what do we have now? We have a good strong movement to the upside, and I would expect at any time from now, and maybe this is the beginning already, that we can see some ABC shaped pattern here, or maybe it takes one more. But you can easily understand that this down channel, this trend channel to the downside, is more corrective than what you can see here in the up move. So I would think that the market, as long as not breaking through all these levels here before, if the market is not pushing forward very, very strong, unidirectional without any recoveries, this would give me fear back to the market. This would indicate that the buyers are still not willing to pay attention. But on the other side, we had a strong Friday, so the people are not afraid of holding a position over the weekend and staying in the risk in the market. We've seen that they are more afraid of losing the opportunity that the market will gain after the weekend and on Monday or Tuesday or whenever. So this is a good and a strong indication for the current market. As long as the market is pushing not too strong and too far here to the downside, everything is okay. What I would expect and what I want to see, I would like to see, is something like an ABC pattern, because it's roughly the same like we've seen here, for example, or we've in the bigger time frame. An ABC pattern is always giving me a good indication as long as the market is moving strong beforehand, and we had this strong movement here beforehand, so everything is in favor to this idea. To give you an idea how far the market can move to the downside, a typical one would be a Fibonacci retracement, which I most of the time have in my mind when I'm searching for setbacks and waiting for a good entry. Typically this setback should reach the area roughly 38.2 to 61.8, not necessarily exact one of these levels here. Some people are really focused on these lines, these support levels here, but I'm more for the zone. Of course, if you have several of them, something like a cluster, you can see here when you have several levels here at the same area here at the same price level, you can expect that the market has a good chance to turn. But even if you just have in mind, okay, we should have in mind this level can be reached here easily. This would not destroy all the bullish attempts we've seen so far. It is just a corrective movement as long as this is three-wave pattern or something like a more or less back and forth with overlapping. So you can see this is lower than this one and this is lower than the next one, for example. So then you can see, this is a corrective pattern, and you can see whenever the market is going above the last intermediate high, I can think of a ending of the correction and a continuation to the upside. So this is my idea, my raw idea. It's too early to say something clearly here with a good entry point or something, because the market needs to develop a little bit more to the downside. On a lower time frame, maybe we will see here something this afternoon. Be advised that there might be some strong movements because of the earnings season. It can be that the market sometimes is surprising us with new information, with new data, with new reactions on the data. So don't be surprised when the market is moving in this shape to the downside. It should be a typical reaction like we've seen so many times before in a big scale. Here you can see this in all time scales. Even if you're a long-term trader, you can see we very often have something like this pattern, and afterwards we have a continuation into the strong direction. So that's from my side with the overview on the Dow Jones. Now let's switch to some stocks. I have prepared two of them for you, and a different approach like I normally, or last time I told you. Last time I was very much with the Elliott waves and the Fibonacci retracement, sometimes the clusters I've mentioned before. This time I have a really easy and a really simple trading approach, which I really love because the computer is giving me an idea what to do. And if you're not willing to use exactly mine, it's absolutely okay. You can introduce or you can develop a system like mine very easy when you find out there are some opportunities where the turning point is very often happening. In this case, it's the Danaher Corp. You can see it here, DHR, which is having some blue bars here, and you can see these blue bars are very often in quite nice positions. Sometimes it's at the turning point, and sometimes it's at the continuation point, and that's a really important thing, because this is not giving me the direction of the next move. This is giving me the idea that the next move should be really fast. Very typically that this occurs. So in this case, I'm not convinced that it is a bull market. I'm not convinced this is a bear market. I'm not thinking of a turning market, but when this happens, the next move should be a fast one and bringing me at least to the next blue line here, which is the same distance like I've seen here. So if you have this market situation here, which is very often leading to a turning or a continuation in a really fast manner, then you can just enter the market when breaking out to the north side with a target here. In this case, 311 roughly. You can see the detailed numbers here. This is really often occurring if you have these situations here. You can see this here. It is not working in 100% of all cases, but the good thing is we have a quite tight stop with this one. So I'm not targeting so much that this is the best trading opportunity I had ever in my life. This is more like a working system which is giving me a good risk-reward ratio, because this is my stop for my long entry. So when I'm entering the market here at that price, my stop for the long position is at that level here. When the market is moving upwards, I take profit at this level. Of course, you can do something like a partial taking profit and keeping a part, maybe a second half running if you like to continue in the direction of the market. But we normally take profit here and taking the stop loss here. So it is a 2.5 risk reward ratio. So even if you have a 50-50 chance, or even if it's below 50-50, you can expect that the result of many trades like this will lead you to a positive situation. And the good thing is you're not binded to one direction. So if the market is in a bull market, like we anticipate now, having a look at the Dow Jones at least, then it's wonderful to have some bullish situation, some bullish trades here, some bullish long positions. But what happens when the market is turning? Then you are bullish and you are buying stocks and whatever. So you're stuck with your long positions. But when the market is turning around, you have all of your positions in the red. So you're not feeling very comfortable. So in this case, I'm not giving the direction. I will wait for a long entry here, breaking through this upper side here, or waiting for a short entry when the market is breaking here. In this case, of course, the stop is this level here, the 280.43 in this case, or 44 to be correct here with rounding upwards in this case. And the target is this level here. And this is a really nice thing because you can even participate 2 times in the market. As long as the market is just entering here to the long side, turning around, you can have the other side as well if you like to have this. In our case, we will trail our stock bar by bar. In this case, this is on a weekly basis, so it's a really slow trading approach. Very often you can reach your target maybe in a few days, or sometimes at the same day when breaking through this level, but you only have to trail the stop if you like to once a week in this case, because this is on a weekly base. But of course you can apply other trading or trailing ideas, for example something like a trailing stop with the super trend, for example, and just saying, okay, as long as the market is moving, everything is fine. When the market is stopping or slowing down, I will take profit and say, hey, thanks for so far. So this is my trading idea with Danaher, one of the first one for today. I have the same idea to make it clear how it works also in different time frames. You can see this is also working on lower time frames as well, intraday, for example. But in this case, I have the situation here with Oracle. And we have the situation here on a daily chart. You can see we also have here very often these levels occurring, or these blue bars occurring at the turning points. And this is giving us an idea, not necessarily that the market really is plunging now, but when the market is turning, we have a good entry here. And even if you say, I don't have a clue where to enter the market, where should I do this, you can find out some of these situations can be really, really suitable for entering the market, keeping the position running and saying, hey, I'm a bullish guy, I'm a bearish guy, whatever, and I want to continue the market into the direction of the main trend, and I want to stay in, but I don't find a good opportunity to enter it. This is some decent idea, because after that the market should move fast, and a quite close stop at the very beginning should not harm your position very, very often. Sometimes that happens, sometimes you will be stopped out. Of course, it's always a probability game, but the chances are really high that you can have some use out of it, especially when you're not knowing whether the market is going up or down. So that's it from my side. In this case, I don't want to bother you too much, because I know Gilbert, Martin and Mike will have some really nice trading opportunities as well. So I want to hand over to Gilbert. Can you get the screen if you like? Because I know he prepared United Rentals, but before that we will hear something different, but I don't want to give the opportunity away that you can do it by yourself as soon as your chart is on. So please grab it and tell us what you want to tell us for today.
So,
okay.
Rudi, many thanks for your analysis. Yes, I'm just starting. I have two stocks prepared for today. It's General Dynamics Corporation, GD, which is headquartered in Falls Church in USA, engages in mission critical information systems and technologies, land and combat vehicles, munitions, shipbuilding, marine systems, and so on. So it's more or less in the Army section, Army area. Yeah. So let's have a look at the little bit at the fundamentals. I'm just switching off my webcam. Just a moment. Yeah, it's here. Good. Okay. So here we see the annual revenues. We see starting from 2017 to 2019, they were increasing. 2020, it was a little decrease. The earnings are quite stable on a yearly base. Quarterly, they also had some rising revenues. In the quarter, 10 billions in Q4 2020. There was a little decrease in 2021. The earnings consensus, they always have beaten it quite slightly. In Q4 2020, it was just a little, they missed it a little bit, but not really dramatically. Yes, and here are the recommendations, and currently recommendations are really strongly increasing. So there are 8 strong buys, 7 buys, and 6 holds, so not really a recommendation to sell it. Okay, let's get over to the chart, why it came into my focus. Let's start as ever in the monthly charts. We see that the price was increasing. Then here it came back, corrected to the outer Bollinger Bands, it went into the sideways. Here we have a nice pattern, the so-called trampoline pattern. Then here it's just continued and got back here to a certain level. This is on a monthly base. Went up again, and now we are here. And we see also the last 2 months were bearish, not really strong bearish. So it was somehow corrective on a monthly base, but the current monthly candle is green or blue in this case again. Yeah, so this is the current situation. We also see here in the climatic distance on a monthly base that we were very strong far away from the SMA 20, so we were climatic in the short direction here at this point, and now we are going back and we are somehow climatic into the long direction, but it's not, if you compare it with other stocks in the technical sector, we are here, it's very, not dramatically as I see it here. It's also not extremely far away, you also see it here. So we are in the range, in the climatic range of the history. Okay, let's get into the weekly, and this was the reason why it came into my focus. So we also see here in the past good signals on the stairway signals. Market went up here quite strong. We came into a climatic phase here at this area, and yes, GD went into a smooth sideways correction, as we see here. And as we also see here is the stock broke out of this line here. And we got 2 weeks ago a 20 trend signal. And this is also a similar pattern, 20 trend, but it did not get recognized by the system anymore as a 20 trend. So it's just, from my point of view, confirming this one here. And let's have a look at the daily chart. We also see already the line here. So this was the, let's just focus it on it better. We see this correction here. We see the crisscrosses around the SMA 20 up and down, and here we also got a nice stairway pattern with this candle, a very strong one. So it was really going into the long direction extremely fast and extremely strong. So now basically at this point I always would appreciate if the market is going up, correcting back to the SMA 20 and brings somehow a reversal pattern here at the level of the SMA 20. Then it's really a healthy correction, but it seems GD is in a rush currently, and it wants to get out of this resistance area here. So it went up. We see a small correction, not really back to the SMA 8, and it just goes up here. So there is, of course, the chance that we see a breakout or a continuation now of this move into the long direction. Currently, to get into this position, I would say do it like this, to just place the entry slightly above the entry of the close of the high of the last Friday. Put the stop below the SMA 20, so then we have some space. And where could it go? Here. So a possible destination target could be, if we are measuring the distance from the last move, take this and project it basically from the last low. So this could be, and of course this is also depends on that the overall market is also continuing in this direction, into the long direction, as it seems it should. So this could be a good target to get in with GD, General Dynamics. Yeah. And of course also looking at this here, the target, this is always this is one of the good things of or interesting things of location point trading, because you always try to get in very tight into a position. The close is the stop is very close to the entry, and of course, if the signal works out, then you have the possibility to immediately move the stop to the break even, and then you are out of risk. If it does not work out, you are stopped out quite fast. But it also helps that because you have such tight entries and stops, that you can really maximize the target and the risk-reward ratio. Okay, so this is General Dynamics. The next one is United Rentals. It's headquartered in Stamford, Connecticut. It's the largest equipment rental company in the world, with an integrated network of 1,165 rental locations in United States, Canada, and Europe. So how do the fundamentals look like? They had quite good increases of the revenues. Yeah, of course, 2020, COVID, it was slightly decreasing. The earnings are quite stable. If we look at the quarterly numbers, it seems that they were rising also in the looks quite similar, the revenues of the years in the last quarters. And yeah, the earnings are not that worth to mention. They are somehow on zero. But anyway, the consensus, they always made it to beat the consensus, the EPS consensus, quite a bit. There are still a good recommendations. So currently we have 6 strong buys, 2 buys, 8 holds, and yes, 2 underperforms. But yes, it's somehow still getting good recommendations into to buy the stock. Okay, so why worry? It's somehow a twin of GT. If you look at this, let's get into the monthly chart. We see here, this was somehow COVID. It wasn't really impacted by COVID because it was in a sideways range, but it worked out then more or less as a trampoline pattern here. So this correction back up here, and then this candle is more or less a good sign that the market really might boost up. So it went up here. It went into a corrective phase, and you see here exactly on the point of the SMA 8 in the monthly chart, it stopped, and now we also saw a slight correction also in this month, but now it's heading up, and of course there is a good chance to go further in this direction, the long direction. Let's have a look, and this was the reason why I took it into my list. The market went, here we see the correction. We also have the similar situation that here this line got broke by the last week. So this is the weekly chart. Here we see the stairway pattern, and there was a sharp move out of this, and the last week's close was also above the SMA 20. So this is quite a bullish sign for a symbol, for a stock. You also see here in the past, good reactions on the SMA 20, on the SMA 8. So this is also where these patterns, they are always working quite well. Okay. Daily chart. So it's almost similar like in GT from the daily chart. We see here the resistance area. It broke out of this line here, and now we have the similar situation that we did not get a I'm just moving this away. We did not really get a correction back to the SMA 20, which should be preferred pattern. So if it really touches the SMA 20, but it does not always need to touch it. So here we see that the Friday candle also now got out of this. We have here this, it's somehow a triple bar retracement into the long direction. And yeah, in this case, just draw it. We see here again, this crisscrosses up and down, down, get up, got up, here back, and now seems to go into this direction again. We will see how the market opens today. So how to enter into this symbol here is again similar like it was already in GD, slightly above this candle. The stop should be below the SMA 20. And yeah, where could be the target? Let's have a look. Again, what is the last strongest move here? I think we can measure out of this candle here, measure it up to the high, take it here over to this lowest low here. And yeah, the target could be somewhere around 423, something around this. Yes, this is it from my side.
That's awesome, Gilbert. Can you hand over?
Yes, I think to Martin.
Yes, that's right. I guess he's waiting already and keen of telling us what he's prepared for us.
Yes, of course he is.
Awesome. Nice to see you. The voice is yours. Your stage is yours.
Thanks very much, Rudi. Okay, so at first, maybe you can remember last week, several of our traders here have been moving a little bit to the bearish side of the market because we had quite a good down move the week before in the markets. But as you know, on Monday, markets last week, markets have been under pressure quite heavily. And then on Tuesday, we saw quite a nice turnaround in the market. So, and now the last week, it closed very strong. The large indexes closed very strong. We still have a little bit problems with the Russel 2000. So like the smaller stocks, they are still lagging the bigger ones. But overall, the market has turned bullish again, quite bullish again. So I guess it's no wonder that we have a lot of long setups today here for you. And from my side, I also brought 2 long setups for the market in very interesting stocks. I'm going to share my screen to you so that you can see this is the first one we got here. It's Smith & Wesson, and who's following our show a little bit longer already might remember 4 weeks ago, we already talked about Smith & Wesson, but in a completely different situation. Before I'm going to show you the chart, I just want to switch the page to the fundamentals of Smith & Wesson. And what we can see here is in terms of revenues and earnings, we have a big upside in the stock. So Smith & Wesson managed to get revenue streams of more than $1 billion in the last quarter for the first time in history. And as you know, Smith & Wesson as a gun producer has a long, long history in the US. And now it's the first quarter where Smith & Wesson made $1.1 billion in revenues. And as you can see here on the right side in the earnings graph, you see the big earnings beat that Smith & Wesson was able to create in the last quarter. And also here with revenues and earnings, you can see how big this record has been in terms of earnings and in terms of revenues. And this is why I still like the stock. let's switch into the chart, and we're going to take a look at the the place where we last time talked about Smith & Wesson, and it was on the 21st of June, before market open on this Monday. Here, I told you that it might be a good idea to buy Smith & Wesson with price targets around $33 to $35. And we see how fast the stock moved. Once breaking above this last high, there was no holding in the market. There was big pressure to the upside. You see it in the volume down here, big volume, many traders pushing up the stock heavily, and we saw quite a big momentum, and it even reached the $40 the $40 level up here. But on the day it reached $40, it turned around quite dramatically, and this, what we can see here, is a bearish candlestick. And when the prices broke below this bearish candlestick, it was, as a matter of fact, quite logically that the stock will pull down a little bit more, and then we saw something like a bear flag down here. We had here this small bear flag, breakout to the downside, and then a move back to the 50-day moving average. This was the first situation where it might have been interesting to buy this stock, but as we can see, it created another bearish flag, broke out of the bear flag, and now continued at the end of last week. Even in a strong market surrounding, the stock continued to decline. And we're at a very important level at the moment, because the stock moved to the last support level. This is the last support level. It's a really big one. We see this last high here from September 20. We see this last high here from January this year. We see this last high here from June this year. So quite a big support level down here. It might be possible that we still see further downside, maybe to $22, somewhere around here. But from here to up here, nothing changed fundamentally for the stock. It's still great fundamentals. It's still a perfect growth perspective for the stock. The company is doing very well, a lot of good profits. So I guess now might be the time to dip your toe into the water down here and maybe build up first positions for the long side. I would advise not to take the whole position right now, maybe take half a position so that you're able to build up more if prices are going down further, maybe to 22-ish levels down here. This also would be a great level to add to the stock. And if it doesn't dip any further, but is beginning to rise down up here, then the breakout above this 25.50 level up here, this might be the chance to build up the whole position afterwards. So that's at least is my plan. I'm going to check out how the market is doing today. What's important for me on the short term is, let's see this one here. It's in the exponential moving average on the daily chart as a 4-day moving average. And what I want to see before I start building up the first position is a close of the stock above the 4-day moving average. At the moment, 4-day moving average is $24. So if it manages to close above $24 today, I might be a buyer tomorrow. If it doesn't, if the stock continues to decline, we have no reason to buy already. We could wait until we maybe reach this 22.30 level down here to start building up positions. But if it's going to turn around today, and what's important is closing above the 4-day moving average, then this might be a good chance to buy the stock. As you can see down here with the slow stochastic, it's really oversold at the moment. Stock is very oversold, and normally these oversold positions get resolved quite fast. Not this time. You see it here in the last time. Oversold, resolved quite fast. Oversold, resolved quite fast. Same here, nearly reaching oversold levels, and then yeah, building up pressure to the upside. So I'm waiting for the stock to retrace a little bit, close above the 4-day moving average, and then I'm going to be a buyer of Smith & Wesson. In terms of the 4-day moving average, you can use it on the upside and on the downside as well. As you can see here, when the big momentum started to the upside, we didn't have a single trading day where the prices closed below the 4-day moving average. First time was down here at 31. And if you take a look at the downside, we do not have a single trading day where the price closed above the 4-day moving average. So all the way down here, no reason to take a long position and create some losses in this company. So yeah, that's the first one I'm looking for today. The second one is, let's see, it's Bio-Rad Laboratories. It's yeah, what are they doing? They're developing and manufacturing life science research and clinical diagnostic products. They're acting worldwide, so that's quite a big company in the end. You have to be a little bit careful at the moment because they are going to report the second quarter fiscal earnings on July 29th after market close. So during this week they are going to report earnings. This could be a problem for placing a trade before they are before they are opening their books for the fiscal quarter. But I'm expecting good earnings actually. You can see here in the history, like the annual revenues are growing, the annual earnings are growing in a much faster way even than the revenue is, and you can see it in the quarterlies as well. First quarter this year was quite good, a lot better again than last quarter. I guess we are going to see rising numbers here in terms of revenue and in terms of earnings. The earnings expectations are not too big. Earnings are expected to come in here around $2.60 a stock. Last time we had earnings of more than $5 a stock. So yeah, I'm going to be I would be surprised if they're not able to beat the earnings expectations this time as well. They did it the last 4 times, and I guess this is going to be the 5th time in a row where they are going to beat the earnings. So, but let's take a look at the chart. It's more important in this case. This is more like my normal setup. I think you realized already what are the points that I like when I'm buying a stock. And what we just looked at here, that Smith & Wesson is a little bit a special situation. It's a big retracement to a very important support level. So I don't really care that the RSI on the weekly is coming down and the stock moved below the 10-week moving average. Normally I don't like these situations for buying a stock, but this is really a special situation. So in this case, I don't care. If we take a look at Bio-Rad Labs, we see the situation is a completely different one. We have my trend indicator, the Gersh trend, on the weekly chart moving strongly to the upside. We have the Gersh trend on the daily moving strongly to the upside. So we have a very strong market here, very strong trend. We see on the weekly that the RSI is in the upper 60 level. It's around 66 points at the moment. I like the stocks most when they're moving above 70 on the weekly. At the moment we are close before this. And what I really like is this big sideways market move here in Bio-Rad starting in October 2012. So we have a lot of time, several months, more than half a year that the stock is moving sideways. But what I really like is, let me show you, is that we have all the time, even during the sideways phases, we have rising lows in the market. We have rising lows down here. So this is indicating that the market is quite strong, that the buyers come in before we move below the last low on the weekly here. And now we actually broke out of this big sideways range. The range is around $140. It's going from 530 to 670, somewhere around this, so around $130. So this makes a price target of nearly $800 if we just add the range to the breakout level. So we have a price target of nearly $800 for the long-term run. And if you take a look at the stock of Amazon or Nvidia or Adobe, you can see that in a lot of big market cap companies, we had quite a long run to the upside, then a really long, several month-long sideways phases, and after this sideways move, there came the breakouts, and these breakouts started the next big trend move to the upside. So I'm expecting the same here in Bio-Rads, that we are just starting the next big move to the upside. This is the daily chart. You can check it here as well. We are way above the 50, way above the 200 moving average. We came down to the 20-day moving average, but managed to close above it. Had this breakout on the daily chart here as well. And as I said, this week we are going to get earnings. Maybe we can see a little pullback after the earnings to get in the stock a little bit more cheap. But I'm expecting big momentum after the breakout above $690. So that's the second one here on my desk for the for this trading week. So first one, Smith & Wesson. Second one, Bio-Rad Labs. These are the markets that I have on my watch list here.
That's awesome. Thanks, Martin. Was really, really exciting. And I'm really looking forward to seeing what Mike has prepared for us.
Yes, guys. Yeah, welcome back to my part of the webinar. Just let me switch over to my monitor. Can anyone hand it to me, please? Because I'm not able to select my monitor.
Give me a second.
Yes, that looks great, Gilbert. Thank you for this. So it's just this one. Yeah, I have two assets for you today. First one is PayPal. The second one is the gold market. And two markets are very interesting at the moment. But I think we should start at first with PayPal. And the timing for PayPal for speaking about the chart might not be the best one because of PayPal will bring the numbers this week on Wednesday. It's I guess it's Wednesday. PayPal the 28th. Yes, it's Wednesday after market close. So it can happen that we will see quite a short back, but we will see this later in the chart. I switch over to the chart at first, so I switch off my camera that you can focus the picture from the chart. And PayPal, I guess most of you know this company, and when we will have at first a look to the numbers of PayPal, we can see here on this page, marketwatch.com. It's site for free. I show this because of I want to bring you in the situation that you can make your own overview about the numbers of the companies you like to trade, you like to own, whatever you want to do with this. And very, very important numbers are, for example, the earnings, and you see here the estimates for the yearly numbers and the quarterly numbers. And one very important thing is when you want to buy a stock or a company for longer term, that you have increasing numbers in the yearlies and in the quarterlies. And when you have a look to the estimates in the quarterly numbers, you can see here the numbers are increasing, and the much better picture you can see here the estimates for the yearly numbers 2020, 21, 22, 23. You see here they increased too. The high estimates as well as the low estimates, and of course the average estimates too. So this one you can check this. This is fine. The numbers are great, and the next one is also very important when you have to prove the numbers for the stock price for the futures, the 12-month numbers, and you see here the high is at 375. The median at 327, and these are interesting numbers because of they are above the current price, and this is very, very important to see for us as a trader. When we expect to see higher prices and we see the market will play this game, then we will see that the charts will show us increasing prices. But at the moment, I was telling you, we are maybe a little bit too early to trade the stock, but it can be something for your watch list. But the situation where we are at the moment, you see this, the current price, the close from Friday was at 309.48. It's quite low below the all-time high, and at the moment when you see to the indices, we are in a situation that the all-time highs are very interesting for traders at the moment. They buy the time highs, and this is interesting to see here. That means when we have just looked to the latest trend here, this one started here at around about 235 in May this year, is leading up to the all-time high. And you see another thing too, and this is very, very interesting when we see here what we have. I hope you can see this, the small trend up here, and the latest low of this trend is here in this area, and this here is my reversal pattern. It's a nice buy signal, and it's very interesting to see what the stock made after this buy signal, and we have also higher potential. So one quite simple thing to find new target for stock next to the analysts is just copy and paste. Just copy and paste the correction to the upside, and this is what we do here. And the next target for this movement into the direction of this trend that we have here is around about 325, 327, and this is what some analysts expect too, and this is very, very interesting. So when the stock will get new buy momentum at the all-time high too, it's a good option to jump into the stock, into the movement here at the all-time high. But you should have in mind, PayPal will bring the numbers this week, Wednesday after market close, and this can be effective to the markets, sometimes very positive, sometimes more or less negative. And when you see, for example, here Chipotle Mexico Grill, you see here this was the price a few minutes before the earnings were released last week, 20th of July AMC, and this was the open. You see this huge rally initiated after the numbers. This is quite interesting to see, but the situation was a bit different because of the market came down before the earnings a few days, and PayPal is at the all-time high, so it can be that the market will price things in advance, and PayPal has to deliver, and this is very, very interesting to see. That means it depends on where the prices are for the stock this week, Wednesday. It depends on where they are. Maybe they are already at the level for the target or not. But one thing is quite clear: we are not in the correction anymore. We are in the movement, and this is crucial to see here. When the breakout will be there until next week, this week Wednesday, you should expect a little snapback to lower prices. And this is what you should have in mind when you calculate your position size. That's to Apple. And please have also in mind this week is it's high season in the earnings season. That means, for example, more than a third of the stocks in the S&P 500 will show up the numbers only this week, and this is huge, and this can have a dramatic impact to the indices. This is one thing, and the second one is that we have the Fed talking this week, Wednesday, Powell this week, and this can be also very, very interesting. And for this reason, I'm talking about the gold price. Gold is very interesting at the moment for the long side as well as for the short side. Some of the bullish traders might have see this golden cross over here. It's not the best one in my opinion, because this golden cross was 15A. But the situation that we have is that the price for gold is below the 200 SMA, and the best working crossings in this style is when we have prices above the 200 days moving average, and this is not the case. That means we have here in the near of the 1835 is the point of the crossing, and you see this level is absolute the resistance level, and in short term it's not yet really clear what we can expect, because of we have whether a downtrend nor prices above the SMA 200. That means it's at the moment bit bearish, and when you also see that the gold price is decreasing in the same moment that the dollar index is increasing, you see here a strong dollar is bad for an increasing gold price, and this is crucial. What we see here it's a level, it's a very, very crucial level for the next days, probably because of the $1,800 is the support level. You see this here, support here, support, but at the moment we have this support level tested in the same time where we see here decreasing prices in the daily chart. That means everything what shows up or comes up with increasing prices will sold off, and this is not quite bullish. So in this case, you should expect lower levels here in gold. That means when we have a look into the smaller time frame here, into the 4-hourly, you see the support level a bit better here. It's 1,790 till 95. This one here, it's the current support. But what you see too is that we have a small downtrend here in the 4-hourly chart. You can see this quite easy here, and you see also that this level over here, the 1810, it's at the moment a resistance level. You see this here, and here again in the current day. Traders sell this level off, and this is quite interesting to see because of this lower highs are an indication that the market can go lower, and the proof of the support will be the decision mark. That means prices below this level over here open the way down towards the low here at 1750, and between we have a small support or buy level. It's here this swing level round about the price of 1,770 US dollar. This from my side to gold. I'm a bit short on time today, but this is not really a problem. It's 1 minute to 3. So from my side, I have done for today. I wish all of you a great trading day, and I would say goodbye for today and hand over the microphone and the monitor to Rudi, I guess.
Yes, thanks a lot for your insights as well. It was really awesome following all these stories from all of you professionals now, and I'm really happy that you as a viewer, a valid viewer, are able to see this, and I'm really hoping that you are joining us next week again, same time, depending on your time zone. It's in the morning hours, 8 o'clock in the US at the Eastern time. It is 2 o'clock in European time, and it's, I think, 9 o'clock. I forgot to check the watch in Tokyo because I'm constantly shifting between the time zones, but of course, it's the same time as like this week. So I hope, I'm crossing my fingers that you're will have a lot of success. Be careful because of the news, like Mike mentioned before, or all of us mentioned before, and stay above the waves and trade the market. So looking forward to seeing you soon. Bye-bye, everyone.
See you next week. Bye.